Assalamu alaikum warahmatullahi wabarakatuh. Ladies and gentlemen, welcome to another show of Money Matters, where we talk about accountancy, taxation, finance, and frankly, all things money matters. And we do today have a special guest with us. We were discussing this last week, in fact, where we were talking about the youngsters that are doing a lot of these stock and shares, buying and selling and forex trading and all these softwares that are available, all these apps that are available nowadays that allow us to do these trades online. So one of the reasons we brought this guest in today, and I'm going to introduce him to you now, he is, his name is Umar Raza. He's a senior hedge analyst. This brother has 15 years of experience, well over 15 years of experience in banking. He has a master's in economic and finance, and he is what we call a CFA, which is a chartered financial analyst. Now, these are credentials that are essentially required to be able to do these trades and analyze these stocks and shares before making, large sums of money, investments in large sums of money. So this brother is actually ideal for us, and we are honored actually to have him in online, in fact. I hope that we're going to get lots of calls today regarding this particular topic. So the number to call, ladies and gentlemen, brothers and sisters, is 0203 5151 764. If you don't watch us on Sky, then you can also watch us on Facebook. It's facebook.com/TV1UK. Directly on the TV1 website as well, tv1uk.tv. And if you're watching on YouTube as well, you can watch us on YouTube. We're streaming on YouTube. It's youtube.com/TV1UK. I also have Arif Bhai with me. Assalamu alaikum, Arif Bhai.
Alaikum salam.
How are you doing? You all right?
Alhamdulillah.
Good.
It's very, very nice to have Omar Raza with us tonight.
Yes, it is. We're honored.
Omar, thanks for your time, and welcome to our show.
My pleasure.
We have a lot of questions in our program and in my practice as well, and likewise Mr. Alam Rauf, he's a practicing accountant as well. Very often we face the questions from the young investors, who are recently getting involved in this forex trading, CFA trading, and the base of their knowledge is a short course sometime. So in the last program we decided that we're going to invite a qualified CFA, and obviously an experienced person like you, who can help our viewers,
Okay, absolutely.
So Omar Bhai, what would like to do today, as I mentioned earlier, if you can give us a kind of a brief overview of kind of what you do, to be honest with you, on a kind of a daily basis, that would kind of help, and the amount of the training that you've had and the experience that you've had, how crucial is that to do your job essentially?
Okay, so in terms of what I do on a daily basis, I'm a hedge fund analyst. So my role is basically developing or maintaining business and working alongside pretty much the most sophisticated investors in the market. So the best traders from the banks, proprietary trading funds, etc., asset managers will go off and set up hedge funds. Hedge funds typically trade high risk strategies, and they charge a big premium basically because they can make quite outstanding returns. The problem is they're not open for investment for what we call retail investors. So people like you and I can't. Minimum investments in hedge funds typically $250,000, and that would be the very, very base minimum to for anyone to take you seriously. Usually, you typically would need to invest multiple millions of dollars into these funds for them to accept your money and for them to invest on your behalf. But again, these are not regulated investment institutions, and so they have much more riskier profiles in terms of what they can do in terms of the markets. And so that is why investment banks hire people like me, because our job is to study and manage them and manage their risks. Because we do business, they trade against us, we do business with them. We do a variety of functions with them. We provide them assets. We can, bring investors to those organizations. We can invest in them, or we used to be able to before. There was certain regulatory restrictions now, but primarily our business is doing trading with the hedge funds that we have, our hedge fund clients and counterparties. And so my job is to manage a portfolio of a wide variety of funds, usually based in EMEA, Europe, Middle East, and Africa, to make sure that we are conducting business with them, good business, and we're not taking too much risk, but we're allowing the clients to trade, but also managing their exposures and ensuring that we don't take a loss with them, because effectively the vast majority of hedge funds trade what are called derivatives, and we can touch on derivatives afterwards, because you mentioned that a lot of your viewers may be trading on CFD markets where there's a lot of options trading. And the thing with the derivatives is, and as you can imagine, the banks are hiring people like myself to manage the risks on this type of trading. And hedge funds are some of the most sophisticated investors. So as you can imagine, these instruments aren't necessarily for the people who are uninitiated, people who don't have much experience in them, particularly things like options. Vanilla options, the types that you have with your sort of more retail brokering clients and things, call options and put options are what we would consider quite vanilla. They can become very, very sophisticated. And so the market participants who use those types of instruments typically have, advanced quantitative degrees. So these my colleagues, we all have minimum master's degrees. Some guys will have like PhDs and things in engineering, physics, mathematics, etc., purely because the nature of the instruments and the returns that they can provide can become quite complex. And so you really need to have a good understanding on, how they will behave in various market circumstances. Market circumstances like March, April last year, when the COVID crisis hit. As you can see, equity markets fell 20, 30+%. These are huge moves. Typically you wouldn't expect the equity markets to move beyond 3% a day. 3% a day in the normal market circumstances would be quite severe. So for them to fall by 30, 35% is a huge move. And when you're trading using financial instruments like derivatives, and going back to the CFD example, these instruments have implicit leverage in them. And as accountants, you will know that where there's leverage, it's fantastic on the upside because it can amplify your returns. It can help you make a lot of money. The problem is leverage. There's also a thing called negative leverage, where a movement against you is also amplified. And so what it means is that you can also suffer large losses and from relatively small moves on the underlying instruments that you're trading. So
excellent.
Sorry.
Thank you so much for going through that, Omar Bhai. Just to reiterate, ladies and gentlemen, the information that we give out on TV, on live TV, is only based on the information that you provide us. So when you do call in and ask any questions particularly, just bear in mind that we're only able to give out as much information as we can based on the information that you're providing. So if you are making these large moves, these large transactions, or if you're anticipating these transactions, please do seek legal advice before you do so, and don't base your transactions just on the conversations that we're having today. Arif Bhai, what's your, do you have a few questions maybe for Omar Bhai?
Omar, going back to the leverage, where you end your conversation, and we know this is the key factor in trading. The risk is the leverage, because This the trading house, they are giving this option to the investors to trade with a small amount of money, which is not the actual share value or of the commodity or the share, what is not the actual value of the assets, but a fraction of that, say 20% or something, they are putting only that much, and they are getting access to trade with the full asset value. So, and as you said rightly, the risk is huge when it goes to the negative, when they lose the money. Now, obviously, you have done your master's in Bristol University on economics and finance, and then last 15 years you are managing the funds. Now, would you please tell our viewers that how safe it is to trade with CFA or Forex by going to only a day or 2 days short course and just get some basic idea about share trading? How safe it is to trade for themselves without the guidance of one manager?
Okay, there's a couple of points you've raised there, just to clarify a couple of things. So the various markets that you can trade, the equity markets, you mentioned CFDs, where you can trade commodities, oil, gas, etc. You can trade futures, FX, etc. So there are various different markets, and the way you can access them are quite different as well. And usually the leverage, which is the big danger, is in the FX markets, the commodities markets, that type of thing. And the issue, as you rightly mentioned, with trading in those markets for the inexperienced investor is the nature of the leverage that they can provide. A lot of these trading houses can provide you 5, 10 times, 20 times, up to 100 times leverage. So basically you're trading a notional of an instrument. You could be trading 100 shares, yet the capital you have to place is only 1/100th of that. And so to simplify the numbers, if you imagine you're 10 times invested, if you put £10 down and you buy 100 shares, £100 worth of shares in company X, if that value of the shares of company X go up by 10%, you've doubled your money because you're leveraged 10 times, which is fantastic. And that's what really appeals to people. But the danger is the nature of people wanting to make very large amounts of money in very short time scales. The problem with that is that if the market moves against you, because you're 10 times levered, it only needs to move against you by 10%, 1/10 of your capital, because you're 10 times levered, and then it will wipe you out. And that's the danger, because the move against you only has to be very small. Because you're levered, that negative move is also magnified, and so it wipes out your account completely. And the danger is people start with small amounts of money, and they can begin to trade with small amounts of money, and they may make positive returns here. And again, there are various factors at play, because the equity markets are influenced very differently than the FX market, etc. Particularly over the last year. The danger is once you start to make money, it starts to feel very easy. And part of the issue is that I think over the last 3 to 5 years, there's a term we have even in the industry now. It's called the investment process has become gamified. You can open apps on your mobile phone now and trade on very how should we say, very, very beautifully created applications that sort of take the effective seriousness away from the nature of the investment. What you're doing is quite a serious thing. You're actually you're investing real money. It makes it look like it's a computer game, effectively. And so the returns you're seeing and they don't seem real to you. The problem is the money underlying it in your account that you've credited into your brokerage account is very real. And so when you make a loss, you can make a very real loss. And
yes, we know about 67% these CFD traders, they lose their capital. Yeah, about 66, and that's warning is everywhere.
Yeah, exactly.
Even that's warning is everywhere that 67% of CFD traders, they lose their money, they lose their capital. But by knowing that, still a lot of these unexperienced traders, when they are going to the market, do they actually realize that what is the actual asset value they are taking the commitment and they are doing the contract for the actual asset value rather than only the money they are putting into the accounts? Do they actually clear about this?
Well, I think they are, but often, you mentioned the number 67%. In fact, I've heard numbers much higher than that. For some, I guess, and it can vary between platform to platform, because the platforms now, because the FCA are regulating them, they have to put, it's kind of like smoking cigarettes, they have to put a big warning up front to tell investors that, X percentage of our investors actually lose money by, trading on these platforms. And, platforms I've seen have been, 70, 78%. In fact, there's a, I think it's kind of a joke, but there's a well-known saying amongst the retail brokerage industry, and it's called the 90-90-90 rule. And basically what the 90-90-90 rule is saying is that 90% of retail investors will lose 90% of their capital within 90 days. And
wow.
That itself, and that's an industry, that's something that people say within the industry, that alone should scare, any inexperienced investor into, thinking very carefully before they put their savings down and, taking this. And I'm not discouraging anyone, by all means do it, but be very aware of and wary of the risks you're taking. Because if the professionals in the market are saying this, then you as an inexperienced investor really need to just tread cautiously.
Excellent. Ladies and gentlemen, if you are watching, we have a special guest with us today just to give another briefing on his credentials. He's a senior hedge analyst with 15 plus years of experience in banking. He's also masters in economic and finance, and he is also a CFA. CFA is he's a chartered financial analyst. These are essentially credentials that are required potentially to do stock trading carefully and cautiously and thoroughly, rather than how a lot of us are doing at the moment with very little experience and very little credentials behind those. The number to call if you have any questions is 0203 5151 764, and we do have Arif Bhai as well with us, so if you have any other questions apart from this particular topic, please do call in as well. 0203 5151 764. Arif Bhai, I just wanted to kind of go through the tax implications as well. Some of these brothers, although we're discussing, and none of us are discrediting these brothers that are doing this, and there's a few of them that are making substantial amount of money. Whether they are experienced or inexperienced, these guys, some of them are making a lot of money doing these trades. What sort of tax implications do we have here? And this is particularly, the question is to Arif Bhai, but both of you can give us an input as well. So Arif Bhai, I'll start with you. What's
yes, now you're nailing something. You're attacking the accountants. Now this is actually a very gray area, the taxation of this trading activities, because it have different categories of trading, as Omar said before. Because some of the trading is we say is speculation or is gambling. Yeah,
Especially for those
like
inexperienced,
forex
those
trading.
that are
Yeah.
not experienced in doing this.
Yeah,
It is
a
more
forex or
gambling than.
commodity. Yeah, you trade on a daily basis, and you it's just based on speculation or gambling. So these sort of things, you don't live on that. That's not your permanent source of income. But you do like to make some extra money. So this sort of activity is actually tax-free. There is no tax to pay on those if you make any money out of that. But CFD trading, it have implication.
Arif Bhai,
tax
I'm just going to pause you. Please hold that
Yes.
thought and we'll come back to you. I've got a caller on the line, so let's take the call, inshallah. Assalamu alaikum, caller.
হ্যালো
Assalamu alaikum, alaikum salam. জি ভাইয়া, আপনি কই থেকে ফোন করছেন?
ছিল নেম খুবই চিন্তা করছিলাম যখন আপনি এসেছেন আমি খুবই খুশি হয়েছি
থ্যাংক ইউ ভাইয়া, আপনি যে দেখরা অনেক 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 ধন্যবাদ।
আপনি তো এখন সুস্থ আল্লাহর বললে
জি আলহামদুলিল্লাহ।
ওকে আমি আর কিছু না থ্যাংক ইউ
Jazakallah, thank you very much. Okay, that's just a caller actually asking if we're all well. So alhamdulillah, that's a very nice call. Arif bhai, let's go for a quick break, and I'm going to come back to Umar bhai after the break, discussing the probably you won't. I'm sure you'll be able to give us some input, but on the tax and on potential profits. What happens with these profits, especially for those. Let's try to keep it for the viewers, and our viewers essentially are going to be the small time traders. So. Let's give them as much information as possible. Let's come back after the break, inshallah. We'll be discussing this and continue to discuss any finance related topics, inshallah. Assalamu alaikum. Assalamu alaikum warahmatullahi wabarakatuh. Ladies and gentlemen, welcome to the second half of Money Matters, where we talk about accountancy, taxation, finance, and frankly, all things money matters. The number to call, ladies and gentlemen, is 0203 5151 764. We have a chartered financial analyst with us today with well over 15 years of experience in banking. If you have any questions regarding shares, stocks, buying and selling, how to do things, what do you need to do, what sort of tools do you need, what sort of experience do you need. If you have any questions relating to this particular topic, please do call in. The guest is here with us, and let's utilize his skill sets as much as possible, inshallah. The number is 0203 5151 764. Let's continue discussing the topic that we were just talking about, the tax implications on buying and selling, daily trades, forex trades. Arif Bhai, let's continue with yourself, and I'm going to come back to Umar Bhai. We are going to touch on cryptocurrency as well, which is another hot topic that a lot of people are buying and holding on to, and the value of it is vast, and they're sitting on this massive pot of gold essentially, and what sort of risks and volatility that we have in that if we are inexperienced. So we'll touch on that as well. Let's go back to Arif Bhai. Taxes. What's the tax implications we have on these shares and stocks? Let's say, for example, is someone that is, they've got a day job and they're doing this on the side, making say few £100, maybe £400-500. Some are making a few £100 a day. It's not bad for a what they call a side hustle. £200-300 a day. It's not a bad income. But what are the tax implications on this?
Well, tax will depends on mainly three things. Let me explain to you.
Yes, please.
Number one is what type of trader they are. Are they a speculator, they are a gambler, or they are an investor? That's one thing. Second is type of investment they are trading, which make their profit. Like, is it a spread betting, or is it a CFD trading? And third thing is we need to analyze whether the person's his personal finance and his personal circumstances, the trader circumstances. So it depends on these three things, whether it will be taxable income or not. If he's just doing it as a gambler or a speculator, as I said, this is tax-free. You don't have to pay tax on that. However, if he's a regular trader, then it could be a regular money coming in and he's making profit out of share trading. Then it will be part of his income tax. He have to pay income tax of his income, regular income. And we know in the share trading, the normal taxation is the capital gain, because normally when we buy the share and we sell it and we make gain out of it, then obviously if it's over the threshold a year, then you have to pay capital gain tax on that. So yes, there is tax implication, but it depends on how you trade, what's the size of your trade, what's the nature of your trade, what is the person involved, what is his the individual trader's activities. What does he do? So it depends on a combination of factors, whether it will be taxable income, whether it will be subject to income tax, or whether it will be subject to capital gain tax, or if he trade through a limited company, then it could be the corporation tax.
Corporation tax. Excellent. I'm going to come back with a same and similar question to Umar Bhai, but just before then, I think we have a caller on the line. Let's take the caller. Assalamu alaikum, caller. Caller, assalamu alaikum. I think we've lost the call. ladies and gentlemen, the number to call is 0203 5151 764. So if you have any questions relating to this topic that we're discussing today, please do call in, and hopefully we can get some insight on this topic more, inshallah. So Omar bhai, similar sort of question to yourself. I mean, I don't know if you go through this as well, but taxes, what sort of implications do we have? Obviously, Arif bhai has explained to us in quite a bit of detail, but from your experience as a analyst, a hedge fund analyst, what do you see? Like, what sort of taxes are we? And again, what we want to do is we want to throw this at the viewers that are trading in, kind of small scale trading. So a few £1,000s, maybe profiting 20, 30,000 pounds. Those types of individuals, what sort of taxes are we looking at?
Okay. Well, I'll preface my answer by just saying that, I'm not a tax advisor.
You're not, yeah.
But you gentlemen, both yourself, Alam bhai, and Arif bhai, specialists in this area. But I think Arif bhai, gave quite a good answer. So maybe I can add some meat to the bones
Yes.
that he provided in terms of the taxation and the tax situation. As far as I'm aware, it's a big grey area for HMRC. HMRC are trying their best to find ways to tax it, but the various types of trading and the various types, there are various elements which make it quite a grey area. So it's quite difficult for even them to pinpoint taxation. So there have been, as far as I'm aware, legal cases where they've actually taken people and people have challenged their tax status, and HMRC have found it very difficult to pinpoint particular tax policies on various types of trading, and it comes back to as Arif bhai mentioned, was the type of investment. If you're trading CFDs and FX, I think it's a bit more difficult, but it's a bit more of a grey area for HMRC to then prove that this is some sort of investment, because these are very sort of speculative types of asset classes. Whereas if you're investing purely in equities, if you're in shares, then it's a little more generic, and HMRC can make that argument and make the case that this is more of an investment versus speculation. And it comes back to Arif bhai's point that the grey area here is whether you are effectively gambling, which in the UK tax law is a non-taxable activity, or if you're making an investment, which is therefore a taxable activity. Going on from that, in terms of HMRC and how they would determine that, again, as Arif bhai mentioned, it really comes down to the proportion of your income that's made up by this activity. If it becomes over 50% of your gross income is from your trading activity, then it starts to become difficult to justify to HMRCs, or HMRC will start to take a slightly different point of view in terms of that this is no longer speculation, but this is an actual regular income source for you.
Excellent. Omar bhai, I'm gonna pause you quickly. I've got another call on the line, so let's take that and we'll come back inshallah. Assalamu alaikum caller.
Hello, assalamualaikum.
Assalamu alaikum, wa alaikum assalam. জি ভাইয়া, আপনি কই থেকে ফোন করছেন ভাইয়া?
জি, আমি এসএক্স থেকে মাত্রাম।
এসএক্স থেকে। জি, আপনার প্রশ্ন হোক ভাইয়া।
প্রশ্ন হইলো ভাই, আমার দুইটা প্রশ্ন। একটা হইলো
জি।
আমার বায়তুল একটা প্রপার্টি আছে।
ওকে।
আর এটা এক্সপেন্স কিলা দেখাইতাম, মানে কত দেখানি যায়, আর প্লাস এটা বর্তমানে আমরা জয়েন্ট, আমরা আমার হাজবেন্ড ওয়াইফ আমরা দুজনের নামে, বাট আমি চাইলাম আমার নামে আনতাম, এটা কিলা কিতা করেন, মানে কিলা আমার নামে আনা যায়।
ওকে, এক্সেলেন্ট। ওকে, থ্যাংক ইউ ভাইয়া, থ্যাংক ইউ। আপনি দেখতে থাকবেন ইনশাআল্লাহ, আমরা উত্তর দিব ইনশাআল্লাহ। Thank you very much for the call. So Arif bhai, if you're going to quickly brief that answer, inshallah. Brothers asking about rental property. Obviously, it's slightly off topic, but if we can answer, that will help.
Yeah. For rental property, there are certain expenses that you can claim. আমি এটা বাংলায় বলছি।
হ্যাঁ, বাংলায় বলেন।
বুঝতে সুবিধা হবে। নাম্বার 1, আপনার ইন্স্যুরেন্স যেটা আপনি পে করেন, এনি কাউন্সিল ট্যাক্স যদি আপনি নিজে দেন বা ওয়াটার বিল এগুলো যদি আপনি নিজে কোনো সময় পে করেন সেগুলো আপনার এক্সপেন্স। যদি টেনেন্ট পে করে তাহলে এটা এক্সপেন্স হবে না। আপনার এনি রিপেয়ার মেইনটেনেন্স, প্রপার্টির রিপেয়ার, যেমন আপনার ইলেকট্রিসিটি, গ্যাস রিপেয়ার অথবা সার্টিফিকেট, আপনার সেফটি সার্টিফিকেটের জন্য আপনি যেটা পে করেন এটা আপনার এক্সপেন্স। মর্গেজের ইন্টারেস্ট এইটা আপনার ডিপেন্ডস। আপনি যদি 20% বেসিক রেট ট্যাক্স পেয়ার হন তাহলে আপনার মর্গেজের ইন্টারেস্ট আপনি এটা ইনক্লুড করতে পারবেন।
The other question the brother had was he wants to move the property from joint tenancy, which is him and his wife, into
from joint tenancy থেকে আপনার যদি আপনার ট্রান্সফার করতে হয়, ল্যান্ড রেজিস্ট্রি রেকর্ডে যদি আপনার নাম ট্রান্সফার করতে হয় তাহলে আপনার বেসিক্যালি আপনার একজন সলিসিটরের মাধ্যমে ওনাকে আপনার ওয়াইফকে আপনি এটা গিফট করতে পারেন। এখানে কোনো স্ট্যাম্প ডিউটি দিতে হবে না। আপনি চাইলে নাম চেঞ্জ করে প্রপার্টির 100% ওনারশিপ যদি আপনার হাজবেন্ডকে বা ওয়াইফকে দিয়ে দেন তাহলে এটা আপনার একজনের নামে আপনি করতে পারবেন। আর অল্টারনেটিভলি যদি দুজনের নামে আপনার রাখতে চান তাহলে আপনার একজন সলিসিটরের মাধ্যমে আপনি একটা ডিক্লারেশন করতে পারেন যে এই প্রপার্টি থেকে আপনি কোনো ইনকাম আপনি নেবেন না, এই রেন্ট থেকে যা ইনকাম আসবে এটা সম্পূর্ণ মালিক আপনার ওয়াইফ। এটা আপনি একটা ডিক্লারেশন করতে পারেন সলিসিটরের মাধ্যমে। Sometimes that's work, but there is no guarantee that HMRC is going to accept that declaration.
Excellent. Thank you very much, Arif bhai. আপনি যে
প্রপার ওয়েতে যদি করতে হয় তাহলে আপনার ওয়াইফকে আপনার এটা গিফট দিতে হবে এবং আপনার শেয়ার তার নামে ট্রান্সফার করে দিতে হবে। এবং ল্যান্ড রেজিস্ট্রিতে এখন আপনাদের দুজনের নাম আছে, তখন একজনের নাম আছে।
Excellent. Thank you very much.
That's the proper way of doing it.
Let's get. We've got a few more calls on the line, so let's take the calls, inshallah. Assalamu alaikum, caller. Caller, assalamu alaikum.
ওয়ালাইকুম সালাম।
Assalamu alaikum, walaikum assalam. জি ভাইয়া, আপনি কই থেকে ফোন করছেন ভাইয়া?
ভাই আমি ইলফুর থেকে ফোন করছি।
ইলফুর থেকে। ওকে ভাইয়া, আপনার প্রশ্ন হোক প্লিজ।
আমার প্রশ্ন হলো গিয়া about share dealings.
Okay, excellent.
যখন আপনি when you buy share, you're paying stamp duty, reserve tax.
Yeah.
So you're when you're buying any shares, you're paying a tax already, isn't it? Yeah.
Yeah.
So say for example, if you buy so and so company 100 shares, you're paying certain amount of tax. Okay, that's one thing. I think that hasn't been made clear.
We'll discuss it, inshallah. Yes.
When you make some profit by selling this share, say for example, you bought so and so share for £100, and you sold it for £150. So you made £50 profit. So do you pay tax on that? What happens to that? Yeah. That's one thing. And another thing, brother, is that I want the panel to make it clear. There is one thing, trading investment. What are the difference between trading investment and trading ISA and trading CFD? If they're clarify the differences, trading CFD, trading investment, and trading ISA, it would make clear to the viewers, what are these?
Excellent.
So that's my question, brother.
Fantastic. Thank you so much, Bhaiya. Thank you very much for your call and your question. And I hope the viewers will also benefit from the answer, inshallah. I'm going to start with the second part of the question, and I'm going to throw it at Omar Bhai. So can we just go through, Omar Bhai, just the differences between these investments? So, the brother asked particularly what's, the difference between investment and shares and trading, and are there more? Are there any other ISAs? Yes, CFDs. Are there any more? And what are the differences between them?
Okay. So if I may sort of preempt the brother, and if he's still on the line, do correct me. But I think his question comes from some of the platforms and how they have various sort of sub accounts, and they're actually called, a trading investment, trading CFD, and trading ISA. Often the platform, CFDs are very different products to stocks and shares. So your trading investment accounts and trading ISA accounts are typically just stocks and shares. Stocks and shares is just interchangeable word for exactly the same thing. CFDs are contracts for differences. These are sort of derivatives where the underlying can be, various things: commodities, oil, gas, copper. It could be FX, etc. So the first difference is between the underlying products. What's being traded. CFD versus stocks and shares, and typically platforms will segregate the two. The reason being because with stocks and shares you will not get leverage on them. No one will provide you unless you're buying options, and no one will on a normal regular retail account will offer you leverage on those. And these are typically divided up into two accounts: investment accounts and ISA accounts. And this is really a tax difference, how the shares are held. So obviously every year everybody has an ISA allowance. It's about £20,000 a year. You can split that between cash only and stocks and shares ISAs, but assuming you keep everything in your stocks and shares account, you can effectively buy £20,000 worth of shares and hold them in that account, and any increase in the value of those shares in the ISA account and any dividends you will get from those shares held in the ISA account are all tax-free. So that's the big benefit from trading in an ISA account. Your trading investment account is a normal account, which allows you to do exactly the same thing. It just doesn't have the ISA wrapper around it, which means that any increases in value, you will have to pay capital gains tax on it after your capital gains tax allowance. And any dividends, you will have to pay dividend tax on it, again, after your dividend allowance that you receive. That's the difference. So it's really a personal tax wrapper. I would always recommend, if you are going to invest, always start to invest with your trading ISA account, because then you will get the tax protection. And then if you want to trade beyond your £20,000 a year limit, then you can trade in your investment account, but then you're subject to taxes on that.
Excellent, fantastic. Thank you very much for making that quite clear for us. Arif bhai, the second question was regarding stamp duty and potentially the tax. But if you can just pause on that, and let's take another call, and I'll come back to you with that one, inshallah. Assalamu alaikum, caller.
জি, আসসালামু আলাইকুম।
আসসালামু আলাইকুম। ওয়ালাইকুম আসসালাম। জি ভাইয়া, আপনি কই থেকে ফোন করছেন ভাইয়া?
আমি সমারসেট থেকে বলছিলাম।
সমারসেট, ওকে, এক্সেলেন্ট। আপনার প্রশ্ন হোক প্লিজ ভাইয়া।
আমার একটা রেন্টাল প্রপার্টি আছে।
জি।
তো রেন্টাল প্রপার্টিতে যে আমার রেন্টাল ইনকাম হয়, ওই ইনকাম থেকে আমার যে এক্সপেন্স হয়, সেই এক্সপেন্সটা বাদ দেওয়ার পর যেটা থাকবে, এইটার পুরাটাই কি আমার ট্যাক্সেবল ইনকাম কিনা? কারণ আমার অ্যাকাউন্টেন্ট বলল যে আমার এই বছর 2021 থেকে ফুল যা ইনকাম হবে তার থেকে রেন্টাল ইনকাম থেকে এক্সপেন্ডিচার বাদ দেওয়ার পর যেটা থাকবে পুরাটাই আমার ট্যাক্সেবল ইনকাম। কিন্তু আমার তো এখান থেকে যদি আমি আমার বাসার এখন শুধু ইন্টারেস্ট অনলি পেমেন্ট করছি, তো ইন্টারেস্ট অনলি পেমেন্ট করতেছি, যেই ফিগারটা আমি পেমেন্ট করি, এটা কি টোটাল ইনকাম থেকে বাদ যাবে না?
এক্সেলেন্ট, থ্যাংক ইউ ভেরি মাচ।
এটা আমি জানতে চাচ্ছি, কারণ উনি বলতেছেন এটা আমার ইনকাম থেকে বাদ যাবে না এবং টোটালটাই আমাকে এইচএনবিতে দেখাইতে হবে, এইটুকু আমাকে ট্যাক্স দিতে হবে।
এক্সেলেন্ট, থ্যাংক ইউ ভাইয়া। আপনি যে প্রশ্ন করছেন আসলে এটা আমরা আরিফ ভাই উত্তর দিবা, এটা একটু টেকনিক্যাল আছে, বাট আপনি দেখতে থাকবা ইনশাল্লাহ। অ্যান্ড থ্যাংক ইউ ভেরি মাচ। আসলে প্রশ্ন করছেন, ইনশাল্লাহ আমরা ভিউয়ার লাগে এটা হেল্প হইব। Arif bhai, let's do this one. Let's answer this brother's question. So I think what he's relating to, the question is relating to the interest payments that he's making that are no longer allowed as a taxable expense for rental income calculations. If you can elaborate on that a little bit, and hopefully the viewers will benefit from this as well.
Yes. From this year onward, next 2021 onward, we know that there was a change in the taxation law, particularly for buy-to-let property. Jara residential property they invest for it. The residential property investor, they won't be allowed to claim the interest of their mortgage.
Arif bhai, if you could do it in Bengali, if you can, আপনি যদি বাঙালি কথা বলেন, I think it will help us, inshallah.
Will it be better?
Yeah, please.
Okay, so basically, এটা 3 বছর আগে এই প্রপার্টি লটা চেঞ্জ হয়েছে, যে এবং গভর্নমেন্ট এটা যারা প্রপার্টি ইনভেস্টর, পার্টিকুলারলি যারা রেসিডেন্সিয়াল প্রপার্টিতে ইনভেস্টমেন্ট করেন, তাদের জন্য এটা রেস্ট্রিকশন করে দিয়েছেন যে তারা মর্গেজের ইন্টারেস্ট এইটা রেন্টাল ইনকামের এগেইনস্টে এটা তারা এক্সপেন্স হিসেবে এটা দেখাতে পারবেন। সো এর ফলে যেটা হয়েছে যে আপনার ইনকাম যখন ক্যালকুলেশন হবে, তখন আপনার মর্গেজের ইন্টারেস্ট ছাড়া আপনার টোটাল ইনকাম ক্যালকুলেশন হবে। আমি একটা এক্সাম্পল দিচ্ছি। মনে করেন আপনি একজন এমপ্লয়ি, আপনি আপনার 12,000 পাউন্ড আপনার স্যালারি ইনকাম আছে, এবং মর্গেজ যখন আপনার প্রপার্টি বাই টু লেটের ইনকাম যখন আপনি হিসাব করবেন, তখন দেখা গেল যে আপনি 12,000 পাউন্ড আপনি রেন্ট পেয়েছেন এবং অন্যান্য এক্সপেন্স আছে আপনার 4,000 পাউন্ড। সো দিস 8,000 will show as your expense as your income. So আপনার স্যালারি থেকে 12,000 এবং এই প্রপার্টি থেকে 8,000 দেখাবে আপনার ইনকাম। সো আপনার টোটাল ইনকাম হবে 20,000। এইটা আপনার এসএ 302 তে এটা দেখাবে যে আপনার ইনকাম স্যালারি থেকে 12,000 আর প্রপার্টি থেকে 8,000 আপনার ইনকাম। কিন্তু আপনি যদি বেসিক রেট ট্যাক্স পেয়ার হন, তাহলে আপনাকে এটা ট্যাক্স রিলিফ দেওয়া হবে। আপনার 20% ট্যাক্স ব্র্যাকেটে যে ট্যাক্সটা আসে আপনার এই যে ইন্টারেস্টের উপরে, এইটা আবার একটা রিবেট হিসেবে দেওয়া হয়। সো ইনফ্যাক্ট আপনি ট্যাক্স দিতে হবে না, আপনার ট্যাক্স রিবেট আপনি পাবেন আপনি বেসিক রেট ট্যাক্স পেয়ার হলে। কিন্তু আপনার ইনকামে যখন দেখাবে, তখন এই ইনকামের ভিতরে মর্গেজ ইন্টারেস্টটা এটা কাউন্ট হবে। That is
Excellent. Thank you very much, Arif bhai. Thank you for making that very clear for us.
Yeah, I think I can cover at the same time the previous caller.
Yes, regarding stamp duty.
Yeah.
So when we buy the shares, we pay
the stamp duty on share trader. Yeah.
Please.
Yes. Stamp duty, what we pay on when we buy the share, we just pay a small percentage of stamp duty, which is 0.5%. 0.5% stamp duty is payable if the share value is more than 1,000 pound. If you buy more than 1,000 pound worth of share, then anything above 1,000 pound, you pay stamp duty, 0.5% stamp duty pay korte hoy. And that is not any significant amount of tax. It's just a duty. But after the capital, what you said, that if you buy your share for 100 pound and sell for 150 pound, here you're making 50 pound gain out of your 100 pound investment. You're making 50 pound gain. So on that 50 pound capital gain tax, you have to pay capital gain tax on that, which is either 18%, or if you are a higher taxpayer, you will pay 28% capital gain tax on that 50 pound. And in another note, if you keep that whole share for long time, say you are keeping the share for 1 year, and in the meantime, your company has given you a dividend on that, then on the dividend income, you have to pay dividend tax. If you are basic rate taxpayer, you will pay 7.5% dividend tax. But if you are higher rate taxpayer, you will pay 32.5% dividend tax on that.
Excellent. So actually এখানে আমরা মানে দেখা যায় যে different types of taxes, not just one tax that you will pay on the gains. There's different elements of taxes throughout the process.
Depends on the nature of your gain or your income. You will pay tax accordingly.
Excellent.
But stamp duty tax data, this is just a duty. It's just 0.5% duty you pay on when you buy the share.
Excellent. Thank you very much for making that clear for us. Omar bhai, we are running out of time. You notice how quickly the time goes. just give us a quick briefing, and I just want to thank you as well for making the time and effort to be with us tonight and give the viewers the insight. Just give us a quick briefing of, to these young brothers, we're calling them inexperienced. Unfortunately, that's the term that we've put on them. Give these guys some sort of an insight, how to go forward. If they do want to do this on a serious level, what's needed? How can they kind of support their tradings? With maybe some qualifications, maybe, or some courses that they can go on. How helpful are they? Just give us a little briefing, if you may.
Okay. Well, I mean, given the recency of the actual activity and how it's becomes prevalent so quickly, there aren't any really official courses that you can take. There are unofficial courses where traders themselves will offer to train you. And there are plenty of those available. If you do a Google search, or if you go onto YouTube, there's plenty of people who come up. The word of advice I would give, and a word of warning, is just be very careful who you select to give you your training. Obviously, cost is one thing, but make sure that the person who's training you has adequate level of experience. Research their background, research their level of experience, research how long they've been doing this, and how much money they have in terms of capital at risk. And they should be able to provide you their own P&L statements to show you how much money they're making and how much consistent profit they're making. Because as Arif Bhai mentioned earlier, it's easy for someone to make £30,000 profit in 1 week or 1 month, but you don't know, because it's just as easy for them to lose £30,000, £40,000, etc. the very next month. So what you want to see is people who can make good, consistent returns, and then go to them and over a long term. Because if you want to use this as a side hustle, as a secondary source of income, or even a primary source of income, the one thing you need to make sure is that you can absorb your losses. And so the 3 things that I would say to all retail investors is: 1, you will make losses. This isn't a winner takes all sort of a promise of a silver lining.
It's not a get rich quick scheme, is it? It's not one of those ones. That's a lot of a lot of the youngsters are thinking in that sense, where we'll invest a couple of £1,000, and a few days later, a week later, we're going to get £30,000-40,000. It's not exactly. It's not like that, is it?
It definitely does not work like that. So I know people who can make money, and they make big money. But the reason they can make big money is because they put a large amount of capital through. So some of these guys who are making, say, £30,000 in a month, they probably have a capital base of, it could be, 200,000, 300,000, 400,000 pounds, £500,000, £1 million, and that's when you start to see the number. Because in terms of trading, it's actually the process of trading to actually make profit is the difficult thing. Making big numbers is just scaling it. So once you have a methodology where you can make consistent returns, you have a system that is delivering you returns. All you need to do is then amplify that, and the only way you can amplify that, and the only how you make bigger money, is then just have a larger capital base. So if you're making 1% on £100, it's quite easy to add, another £900 and make 1% of £1,000, or make 1% of £10,000. So scaling it is quite easy. So the big numbers you often see is because a lot of these guys who are doing it put in quite a large proportion of capital, and that's how they're making the big profits. But what I would say to the brothers who are watching this and who are doing this is, again, make sure you're getting excellent training from people who are very, very well experienced in all sorts of trading markets as well. It's very easy to trade, when the market is, and make money when the market is particularly calm or stagnant. But you need people who have traded through various extremes in the market, because it's those situations that can really make big losses. So, and the three ways I would say, the three most common ways that retail and inexperienced traders make losses, and the way to avoid them, I would say, is risk management. And anyone who's really worth their salt in terms of trading and training should be emphasizing the extreme importance of risk management when you're actually trading, sorry. And the way you do that is, first of all, be very careful with the amount of leverage you're taking, because that will easily blow up your account. Because, like I say, the negative leverage principle, if you're 10 times levered, you only need to lose 1/10 of your capital, or 1/10 of your original stake for it to be 10 times, for it to wipe out your entire original investment. So be careful of leverage, use it, but use it very carefully. Point number 2, make use of stop losses. A lot of these trading platforms will allow you to make stop losses. What a stop loss is effectively you are programming into the trading platform. If I buy a stock at a share at £1, I don't want to lose more than, say, 10 pence per share, and you could be trading, say, 1,000 shares. So you're limiting your loss to £100, say, in that example. By doing that, the systems will automatically sell if the share price goes down by 10%. So it goes down to 90 pence. The system will automatically sell your share, so that if it falls below 90 pence, if it goes down to 80 pence, 70% pence, 60, 10 pence even, you're not going to lose thousands of pounds. You will only lose that £100. So make sure you use your stop losses, because they're there to protect you, and make sure that you set your stop losses at such a level that it doesn't wipe your account. That's point number 2. Point number 3, when you're trading, don't, and this is a very, very common schoolboy error, as they say in the markets, and that is to invest too much, put too much investment into any one trade. All traders will tell you to trade a small proportion of your capital on any one trade and trade multiple trades. Any good trader may have 5 or 10 trades on at any given time, but you should never ever trade more than, and I think the rule is maximum 2%. If you have very high conviction on the trade, maybe you could take it to 3%, especially if you're in the money, you've banked a lot of profit, and you want to take a bit more risk with the profit you've already made, go up to 3%, but never any more. And your general rule should be, on any single trade no more than 2% of your capital, because if you lose, and it's probability will say, if you're trading FX, you have a 50-50 chance of it going up or it going down, it moving in your favor and moving against you. It doesn't take very it's a fairly likely event, to make, if you're going to make, making one loss is a 50% chance, making 2 losses in a row is only a 25% chance, 50% times 50%. So to have repeated losses is quite easy, and happens quite regularly. And this is one of the primary causes of losses for inexperienced traders. So when you limit your individual trade to 2%, even if you made 10 losses in a row, you will only lose 10% of your capital. And this is very important, because what a lot of inexperienced traders do is that they will want to chase the big numbers. They will want to make thousands of pounds instantly. And so they will start to invest maybe 20, 30, 50% of the capital, maybe even 100% of the capital on any trade. If you invest 100% of your capital on one trade, you have a 50% chance of losing everything. And so it's a very dangerous strategy. So good traders, experienced traders in the markets will never trade more than maybe 2% or 3% of their capital on any one trade. And that will always protect you. And that will allow you to build up the experience that you can continue to trade and continue to start making money. And, as you develop your experience and you hone your skills, you will be able to have a long term and have the longevity in the markets. Most people blow up because of one of those reasons: not using stop losses, investing too much into any single trade, on being overly levered, and a small correction in the market wipes you out. So.
Excellent. Thank you very much, Omar Bhai. Thank you very much for actually giving that last few bits of advice. I think that's crucial for those young investors in this day and age that we're seeing, inshallah. Ladies and gentlemen, we have run out of time. We will be back again on Thursday, inshallah. And Thursday, we are going to be discussing the budget. The budget is on the 3rd of March. So please stay tuned and do join us. And if you have any questions, do call in and ask away. We will be back again on Thursday at 8:30 p.m. Thank you very much for watching, and hope our show today has helped the insight on stocks and shares. And thank you very much for our guest, honorable guest that has come in today and give us the insight. Thank you very much for watching. Inshallah, we'll see you on Thursday. Assalamu alaikum.